some of the indicators I use for tactical trend indications. You see the pink line here. It's a 10-day emerging exponential moving average. I think is a good when markets are trending in a sort of a tighter, shorter term trend. It's a decent indicator for where the very short term trend is. And then for the slightly longer term trend, 21-day simple moving average. And then of course when those cross each other, that could be interesting. 100-day and 200-day moving averages. You can see the influence of the 200-day moving average here. It's actually a pretty interesting confluence of events. You had the major low before, this is euro versus the dollar, by the way, before the US election, when it looked like Clinton was going to win at around 108.50. And then you saw the election itself, a crazy freak out day, and that set the bar there. And then that was retested in early December and retested a couple more times. And then around the French election, that's when it finally broke this level and actually provided the support more or less post the French election result here. And we've rallied since then. So a pivotal level there, 108.50. I think the key level or support for this trend is around 110. Round levels are quite important for Eurodollar. Sometimes you'll find that these levels are sticky. Going back in time, you can see how this 110 level proved kind of pivotal at various points. Here, this was after Brexit. Couldn't quite take out the 110 level. And then the 115 level is at this level. Sorry. That provided the cap, except for a couple of intraday, maybe 48-hour pushes above that level. Provided the cap all the way through 2015 and 2016. So 115 to the upside looks pretty important if this rally is going to continue. Fibonacci's are Fibonacci sequences. If you're familiar with those, Fibonacci levels are very important in foreign exchange, especially for the liquid pairs. How do you use them? I like to use 618 Fibos at turning points. And what I mean by that is here we have a big down sequence, Eurodollar going lower and lower and lower. It collapses to the new lows here, makes a significant rally here that sort of wipes out the last sell-off wave. So to me, that's starting to neutralize the chart. So the reason you look for a turnaround Fibonacci is what I call it, 61.8, is because maybe the chart is turning around. And indeed, that 618 level, and actually the round level 105, again, I talked about round levels, is that area was the support for Eurodollar as it turned around at that point in time. You can also zoom in a bit and see a similar setup here. So here we had the new lows, more locally speaking. First rally attempt and then the second one. So we're starting to show that we're not wanting to go lower here at this point. And this 618 level proved fairly important once again, near the 104.50 area. And you can find these all over the place. You know, nothing's going to support at every point in time. Now, a continuation Fibonacci could be the 382. That's when you're looking for a trend to continue rather than looking for a new trend to be to get underway. And here we have, for example, this move after the French election. It was the 382 was where this support came in for the continuation move higher. And that happened once again. Here we have another very strong trending move. Again, we're not looking for a turnaround. We're just looking for support to sort of say, yes, this trend is still valid. And that support came in just a couple of pips ahead of the 0.382 or 38.2% Fibonacci of that move. Now, in terms of market potential or volatility potential in the market, I think it's somewhat low right now. If you look at a average trading range to get a sense of where we are, using a 50-day exponential moving average, you can see we're at the very lower end of daily moves. So it's a bit hard to extract opportunities from this market in terms of actual pips. It was worse in 2014, but it's pretty bad relative to the last couple of years of history. So we like to see a bit more volatility for opportunity. And you can see it when it does go to these very, very remarkably low levels, when it finally digs itself out of this volatility, low volatility, sometimes the volatility becomes quite remarkable. And that's where we saw the big steep sell-off in Eurodollar. structurally speaking, it's the people that are looking for a lower euro don't have much to argue for, because the big attempts to break this low for the cycle. It's a bit hoppy because I've scrunched the chart so much. This was rejected and we've come up so much that we're still back in the range here. So we're in a bit of limbo here on euro dollar in a structural sense. It needs a lot more to start argue for much higher levels, for a breakout higher, but certainly nothing pointing downward at this point in time.